Hello traders, this is Mike Billion. Today is August 8, 2016 and let's talk about the market. I wanted to talk about election year and I wanted to show you some very interesting charts and some very interesting data that I think is going to help you for the end of the year and it's going to help you trade this election year. So I usually look back to see what happened in other election years so I can have a clue and it can help me with this election year. We can see here 2000, it went up, it was trending up. 2004, it was trending up slightly. We know what happened in 2008, recession, and 2012, it went up also. Right now, if we go back, let me show you, if we go back to 2004, this is what happened in 2004. We moved sideways, but it finally moved up and we finished 2004 about 8%. So the average since 1900 is 9.5%. That's the average. So we finished below average but very close to average. So if we check the data from 1900, post-election year is usually 3%, midterm is 4%, pre-election year is usually between 11 to 12%, and the election year, as I told you, is 9.5. That's the average since 1900. So in 2004, we finished below average at 8%, but it went up, so it's good in 2004. So that's what happened in 2004. If you were trading here, it was a boring election year because it moved sideways. And right at the end of the month, the election year, around the beginning of November, it went up really nice. So you can see right here, and George Bush took office. Then I'm going to show you 2008. This is 2008 when Obama beat McCain. You can see he was trending down all the time. But you know what happened because it was recession. It went down 40%. So we really don't have a clue what the election year did for the stock market. It was a big problem and it went down. So we don't have a clue who were trending, Obama or McCain, on the stock market because right here we just went down and we finished down moving sideways. If we move to 2012, then Obama versus Romney, you can see here they was trending up, making higher lows. Very nice trending year. So this is one of the best years, presidential years that I ever trade. And look what happened now. This is what happened right now. Right now, we open down election year, then we move sideways, bounce, but we are up only 6%. So we are way below average. In 2008, it went down 40%. 2012, which it was a good year, it finished about the average number 9.5. It finished at 12%. So like I say, it was a great year, 2012. Right now it's at 6%, but it's trending up. You can see it's trending up. It break out 212 because I talk about 212 many times. This is a major resistance, but I'm waiting for a pullback. I'm waiting for a pullback because that's how I like to trade. I don't want to buy right here and it pulls back and I'm going to be holding a position that I bought it too expensive. I wanted to buy it right around here when it tests the 212 and bounce again. I think we're going to finish up because if we see what happened in election year between the election day to the end of the year, if the Democrats win, it says that we're going to go down an average a minus 1%. If the Republican wins, and that's what I want, we're going to go up 4% and we're going to finish for the end of the year around 12 or 10%. So I'm thinking that this will go out to 225 in the spider. So that's my take. So how do you trade this? Well, the way you trade this is you're going to have a very interesting number, this 212 and the spider. If you break down below 212, this thing is gonna go down, especially if Hillary is the president. This thing is gonna go down. It's probably gonna finish around 197. if Trump is the president and we break out the 220, we're probably gonna finish 225 or 228. You know, we're gonna have a nice spike like we have in 2012. So this is my take because we are already breakout, but that's what I think is gonna happen. So the level to watch is 212 in the spider. I think the DMI looks bullish, but it's not yet. It's waiting to see who is the president in November so we can see. Right now you can trade, but try to buy it. Try to buy near 212 because if you buy here at 218, let me tell you, at some moment it's gonna go down and you're gonna be holding a position that you bought really expensive. Now let's talk about Apple. Let me show you Apple because it's a very interesting chart. Look at this. It break out this major downtrend resistance. It's trending very nicely. So many people are asking me, you know, should we enter right here? My answer is it's gonna go to 114. That's my answer because DMI is bullish. ADX is about 20. It's at 29. There is still room in the directionals, in the plus directional and the minus directional. So I think it's gonna hit 114 very soon. If you want to enter here, that could be a nice position. But my kind of trading is I wanted to enter when it bounced down, it goes down and it bounces. That's what I wanted to trade. So if it goes right here and tests the 20 double exponential because it is 105, 106, that will be an awesome trade if you enter around that number. But if you want to hold it right here long term using the stock, 114 is the target. Maybe it's gonna break out that level, but I think when it goes to 114, it's gonna be ready to pull back. But I'm waiting right here, so it pulled back to 105, 106, and I'm gonna go long with the target 114. So traders, I have a nice offer on the website. It's a 90% down on the lifetime membership. This is a very nice promotion. You're gonna get my course, my mentoring, my trades, and this only happens 1 or twice a year. So go to the website and join my billion. So this is everything for today. Trade on.